Hello everyone, I hope you're well and doing well with your trading. I'm Anthony Beardsall, I'm a trading coach and I'm here to help. And that's why I'm sending you this video with great wishes alongside it for your success. Now, I've posted numerous videos about my gold system scalping on YouTube. And here's another one. You'll find in my videos that there's a level of consistency that I don't think that you get anywhere else. I'm going to show you some trades coming up that will illustrate very similar things to the videos I've posted in the past. It's not to bore you. I promise it's not for that. It's because repetition is the king of learning, and eventually, if you see these things and you hear from me often enough, my wish and my hope is that you have some success with my system, my gold system, which you can explore on my website at excellenceassured.com. Anyway, let's get into this. You'll know by now, if you know me, that basically my system is short term. It's one or two candlesticks and based on one or two candlesticks appearing on the screen at the right time and in the right place. And when I say at the right time and in the right place, I'm talking about context and content, the two of the three C's that I look for in trading. I look for context, content, and confluence. And I'm going to focus during this video on context and content. And so I look for those items before every trade. And that's how you gain consistency in trading, by repeating good things. So if you're looking for the same thing all the time, that's going to be good because your brain's going to get used to it and you're going to know when it's there. So this is the consistency that I'm looking for. I'm looking to take a trade. I look for the candlestick that's about to close very close to the 8 EMA. And then I use the EMA as context, very close to the 8 EMA. I look for a small wick on the following candlestick. I enter, and all things being right, I enter when the wicks complete and the candlestick starts moving in the direction I expect the trade to take. And they're the two things that I'm looking for. And it's not complicated, but the position needs to be right. So let's have a look at these trades, and I hope you get a better idea of what's going on. Give us a shout if you need any assistance with your trading. I love to help people, and my aim is for people to do this successfully and do it for a living if that's what they want to do. So let's have a look at this then. Here we go. This is the chart that you could see behind me, and a typical candlestick chart, I'm sure that you'll agree, and overall an uptrend in here. And you can see the channel that's made here between the 8 and the 20 EMAs. This is what I refer to as a river of value, and price doesn't like being in it. And obviously it's not that price kind of sits there and goes, I don't like being in here. It's the fact that traders see it as an opportunity when price is in there to either go long as they did here or go short. And that means that in here, buyers outweighed sellers and price rose as a result of that. And this is partly because you had a nice little uptrend leg followed by a little downtrend leg, and that was much less powerful. You look at the size of the bodies in the candlesticks than what you got preceding it, and therefore at value traders bought. And they bought here, and 1, 2, 3, 4, 5, 6, 7, 8, 9 candlesticks on the 10-minute chart. That might have been all one candlestick. A nice little trade. But we're on the 1-minute candlestick chart here, and we've got price nestled on top of value. Price has come down just into the channel and then gone up above it with this green doji candlestick here. This, isn't necessarily an indicator in itself, this doji candlestick, but it's got a green body and it's taken price above the 80 EMA. So I'm looking now for price to go down, which it did. And the 80 EMA is having an effect here. It's repelling price upwards. And when I get a little bit of green in here, then I'll be off. And so here we go. This is what we got next. So let's just reveal a little bit of green there. So a little bit of green and you're in, and that's roughly where you're in. So price goes down, closes here above the 80 EMA, but very close to it. Price goes down with a little bit of red, goes up with green. That's my gold system entry, and that's how it finished. Okay, so this is what we're looking for. We're looking for the context to be correct, so price to be right next to value. We're looking for the content to be right, so price being just above the 80 EMA, and therefore I'm looking for a long. I'm looking for a tiny wick to come in, followed by green, and then I'm in. That's what I'm looking for. Here's another one. So on this trade, we've got a short, but we've got the same signals. Actually, let me just move this over a bit, and this, and you can see here, very similar to the last one. We've got price going up through the river of value there, and then putting in a little wick followed by green, and price went up, closing here above the 8 and the 20 EMAs, and price went up there. So you risk, if you choose to place a stop in your order, then you'd probably be looking at placing a stop based on the minimum stop size that your broker allows. Alternatively, it's a question of watching the candlestick developing and exiting if price goes down here once it's gone green. So it was a question for me of waiting. There is here a trade. So price came down, went up, kissed the 8 EMA, and then came back down again. And so there is a little wick on the top of that, as you can see, hopefully now. Entered when red and down. That was worth doing and netted a good profit, and finished at the 20 EMA, where it then bounced upwards. And this is gold bouncing candlesticks. So I've taken a sell trade here. Price came through into the river of value. This was stronger than this, so the response was this, ended with a doji, and it was a response to this downward move here, where it had a good strong candlesticks likely to be followed up. So next time price went through the 80 EMA, put in a little wick, went red. There's my entry. You can see it would have had a little bit of red on there, so it's got to be visible, hasn't it? And therefore it was. So stop is up here, and take profit at the end of the candlestick. And if price goes up, then you exit for a loss. But by the time it got down here, you see this entry line here, you've got several different levels of resistance from prices rising. You've got the open of the candlestick, the close of the previous candlestick, you've got the high of the candlestick, and you've got the EMA, all operating as resistance, and price shot down, as you can see, for a nice profit. And you know, how many of these do you need per day to make a living from trading? How many? Ask yourself the question. I would guess not many. And you know, you can't start off throwing all your wealth at this game, because it takes practice. But these videos will help with you firstly understanding how the charts work, how price moves, and also help you see some opportunities that you can learn thoroughly in my gold system. So this strategy works on all time frames. This one here is the 4-hour chart, and this is the Dow. So the 4-hour chart here, you had a good green candlestick closing above the channel of value, and then you got a wick at the bottom here, and price went up for 4 hours just about. Pretty good, eh? These gaps here between these prices are 200 points, so that's opened at 44,900 roughly, and your stop is about 25 points below, and it's closed at 45,600, so 700 points. Not bad, eh? And back to the 1 minute chart. You know, it looks almost the same trade, doesn't it? Strong green candlestick closing above the river of value, just above the 80 EMA, and price went up similar to this. But this time, because it was on a shorter term chart, the risk was not 25 points, it was more like 5 points, and the reward was not in the hundreds, it was about 50 points. But still, the risk reward ratio, significantly reward being higher than the risk, and several times higher, that's what's going to make the difference. And that's how I trade, folks. So I'm hoping this is making sense to you. Let's have a look at the previous trade in live action so you can see what happens in real time. Okay, so there we go. Same. So that's the 1 minute chart, and we've got price nestled in position. I'm ready to pull the trigger once I see green, and I'm going to press play on this now. There's your entry. And so if price goes down, and it goes down below the low of this candlestick, below the 80 EMA, then we're out for a loss. And this is what happened next. It's not powering up, you know, so you can't see it. It's powering up by buying outweighing the selling. Steady. And we're reaching the end of the candlestick here. Nearly. It's shooting up through the roof. There you go. So all indicators looking good. All context looking good. All content looking good. And there we go. So end of the candlestick out. This, don't worry about this. We're out of the trade by now. It's way above the 80 EMA now. So all things good. I'm really hoping this is making sense to you and that it's a possibility for you, because the markets are, a display of opportunity, and you've got to understand the method in all of this, because there is method. Otherwise, nobody could do it if it was completely random. And so learn the methods. And this is enabling your brain, once you've seen the signals, it's enabling your brain to get around this. Brains see problems, and I'm offering solutions. There you go. I hope you enjoyed that. My name's Anthony Beardsall. Thanks for watching. Do subscribe, ask any questions you want using the forms below, and I'll catch you on the next video. Thanks for watching. Bye.